checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Hey, what's going on guys? J-Trades here, back with another brand new video. And in today's video, I will be doing my daily day trading recap of all the trades I took today with the Essential Traders University day trading team, which is information if you guys want to join. The link is down below for that. Basically, I am providing every single one of the trades I do take as signals to the group, as well as we do have other sections within the free Discord that you guys can join. If you guys are not interested in premium, you guys can still talk with other traders and as well as just consistently improve yourself. But aside from that, we also have another course, of course, down below in the description. So if you guys are interested in learning how to day trade, that course is perfect for basically traders of all levels, whether you're in the middle, you're just starting out, or you're pretty advanced. There's information for everyone of all levels. But aside from that, let's jump straight into the review today. So the first trade I took today was on gold. And you guys know, if you've been on this channel for a while, you guys know I love trading gold. Gold is my baby that I trade every single day, and this is gonna be for a fact. So for gold today, I was looking at this key area actually over here, okay? So I do have my high time frame zones already drawn out. As you guys can see, I've actually noticed I've changed my chart colors a little bit just to try to get rid of more emotions, I guess, in trading, because I feel like these chart colors and this color combination specifically is pretty good in terms of like not being like FOMOing, things like that. Not saying that I do that, but in general, it is something that I just noticed has improved my psychology a little bit in trading. So I started changing up my chart colors. But aside from that, on the higher time frame, right? We always start on the higher time frame. Okay, we know we are in New York session, which is a session that I trade gold in. I only trade during that session. Every other session I do not trade. Low volatility, low volume, and then London's obviously not the right session for me. So on a high time frame, you guys can see we are making another leg up off this very big bullish push up. But of course, every single push up, we do have these major big moves to the downside as well. As you guys can see, it just means every time that we do pump up that we most likely will be breaking highs. But this setup was super clean that I just could not just like skip it. So this setup clear was very, very simple. Honestly, if I break it down extremely simple, you guys will understand. We have our premium zone right here, and we have our discount zone right here. So discount is where I want to be buying, and premium is where I want to be selling. So based on these two supply and demand, same thing. You guys can call it whatever you guys want. Drawn on the higher time frame. Drew this on the 4 hour and 1 hour time frame. This is a zone of premium. This is a zone of discount. So once I've identified that, I then look into where price is heading. So basically, price was heading upwards already. I already missed this move, unfortunately. Otherwise, I definitely would have played this move right here. Perfect setup. We're here with this mini demand zone right here. You guys could definitely play off of. Very safe entry as well. But here in the beginning, I was looking at this level of liquidity standing right here. And for liquidity levels, you want to make sure you mark them as accurate as possible. For me personally, I like to mark them on the 1 minute and 5 minute time frame. I find 5 minute high quality liquidity, and then I of course adjust that so it's on the 1 minute so it's more accurate, right? So once I marked this liquidity out, I saw we have basically, you guys can say we have a supply zone right here. Now, us, you know, smart traders, okay, yes, we are all retail traders, but us traders that don't follow the retail traders, we know that there's many things called liquidity sweeps, right? Where we sweep liquidity, stop out traders that do enter immediately off of entering this zone. And this is one reason why I don't trade directly off zones anymore like this, because you're just gonna get stopped out half the times due to these liquidity sweeps that occur. So I like to wait for a breaking structure, more confirmation, and then that's when I enter. So for this trade specifically, I had a liquidity sweep right here, and we've identified this is a high quality, high time frame zone right here with a big push down. So I'm looking to sell here for sure. Very high quality setup right here, taking on the 1 minute, right? 1 minute is my entry time frame. So let's go back on the 1 minute real quick. Again, we have liquidity drawn out over here. Liquidity touched multiple times. I was waiting for a sweep right here. We did indeed sweep liquidity right here. And again, in my course, I do go over every single case of liquidity sweeps and how you guys can determine when you should be entering off liquidity sweeps. Because for example, someone is going to be like, oh, it's almost touched liquidity, they would enter here, but that's actually a bad entry. You want to wait for more confirmation. So for me, I like to wait until it's fully swept, either with a wick or a body. Body's not preferred, honestly, but body's fine too, as long as we have a wick above like this. So once the body closes above And then we have a very nice bearish candle that engulfs that one coming down. That is very high confirmation that indeed is a liquidity sweep and not a breakout to the upside. So for this trade specifically, I was waiting for somewhat of a break of structure. Right here, we do have a previous low right here that made this new higher high. I was waiting for this low to get taken out, and that was exactly taken out by this candle right here. This is enough momentum telling me that price is breaking structure to the downside. So we have 3 confirmations here. We are in a major high time frame premium zone. We also have a mini zone, supply zone right here. We have a liquidity sweep, and we have a break of structure. And that is basically all it. I mean, this is a A+ high quality trade setup. Now, my stop loss should not be this high, honestly. Usually when I play off break of structures, I like to have a tighter stop loss because it is more confirmation trades going to go my way. But again, that is completely fine right here. We have a 1 to 2 risk reward trade right here. Not the best risk reward. Most of my trades are 1 to 4. But for this situation, due to the stop loss mainly, it is a 1 to 2, which I'm completely fine with. You know, a win is a win. So yeah, I was basically targeting this area right here. If you guys have noticed, this is called an inverse zone. Again, stuff like this, I will go more in depth into inside my course. You guys can check out the course down below. Link to everything is there. The course has literally like 40+ lessons of videos you guys can learn from. I go over every single part of my setup, every single part of my day trading plan, and everything you guys need to become profitable traders yourself, right? You guys want to be self-sustainable. But of course, you guys just want to make money. You guys can follow my signals as well, join the premium group chat. But right here, I have what we call, or I call, a inverse zone right here. So once we broke out this supply zone, this has become potentially demand. So basically, I was targeting this area right here. So anywhere around this area, I would have taken profits and probably closed out at, mainly because we know in a higher time frame we are bullish. So we don't want to be taking and holding this trade for too long. And that was indeed a very smart decision. As you guys can see, we basically tapped into that area, inverse zone, and then we pushed up. Now this is 2:00 p.m. so I wouldn't count this wick because this was news when FOMC came out. So, you know, there's that. But great trade, honestly, today on gold. Massive W. Now let's go on to my other trades I took today, which the other trade was on oil. I've been recently doing more back testing on oil to test out many different things like that, you guys know. And of course, I got back test everything I know personally to help you guys become better traders. So for this trade right here, I was looking at, well, first of all, we have a liquidity sweep right here. Okay, so this was around 3:00 a.m. London open. We swept liquidity around 10:30, so near New York open. We swept liquidity, we pushed down. But the thing is, this is a very big candle for a 5-minute, right? This is a very big 5-minute candle. If you go in the 1 minute, even, let's see, go in the 1 minute, you wouldn't have, I mean, you could have a solid entry here. But me personally, the reason why I didn't enter that liquidity sweep was this reason right here, because we have a fair value gap. We have an imbalance right above that liquidity area. So usually what happens is when we have an imbalance above liquidity, I'm literally telling you guys like secrets right now, like straight up, this is just stuff that I found just from back testing. No one else has told me any of this stuff at all. But what usually most of the times when we have a significant area, like on a higher time frame, 5 minute, 30 minute, 1 hour, 4 hour, maybe not 4 hour or 1 hour, because those gaps are massive. They may not take time to fill. So basically 5-minute gaps is what I look for. And you guys can see we have a gap right above liquidity, which to me signifies that price will still continue higher. Despite, yes, we did have a solid push down. You guys definitely could have caught this move right here, but it would not be your ideal trade where you target next sell side liquidity. So basically, I was waiting for us to basically reach into this gap right here and tap into it and get a reaction. Okay, for fair value gap entries like this, I like to wait for a reaction before I enter. So I don't want to see price wick up and break through this zone, this gap right here. I want to see it fill the imbalance and push back down. So basically, I essentially entered right when I saw this bearish candle right here. So I can even move this here. This bearish reaction candle right here was a good reaction, telling me that, okay, we've just filled the imbalance and we should be heading down based on my bias. Stop loss right above this zone or imbalance, because what I see sometimes is we do wick up a little bit more outside of this imbalance just to stop our traders before pushing down. So that trade right there, we essentially took a 1 to 9, which is an insane trade. Okay, we had a 1 to 2 for gold, and then we had a 1 to 9 for oil today. You know, for this, especially people that are like taking challenges and stuff that for funded accounts, you would have passed risking about 1,500, not even, off this one trade. That one trade I signaled to the group, you would have passed the challenge easily, just off of a single trade, right? We want to be focusing on high quality trades. Like always, we don't want to be or caring too much about low quality trades. So that's exactly what happened off this trade. Excellent trade right here. My profit target was this area right here. So anywhere around this area right here would have been a nice profit target, or you can target full on liquidity already down here, which price later ended up touching. Personally, for me, I don't like seeing big pullbacks like this. This is basically almost throwing away profits in a sense, because there's a possibility, since we did break structure here, that we could continue even further up, hitting stop loss. That's not something you want, especially when you're up 1 to 9 risk reward. So I essentially closed out near this area here, right here, near this, you guys can call a mini demand zone right here, right here. So I closed out my full position there, did not hold any single runners, not risking it, also because oil is bullish, okay? So there is that trade right there. And the last trade I took today, and I signaled to the group, was this one right here. This was after this was kind of during the meeting, FOMC, which is a little dangerous, but to me, this is very clear where price was heading. And this trade is actually still open and it's still running. We are up 0.73% right now off this position. TP1 was right here at this level that I showed right here, Drew, and it smashed straight through. I'm aiming to target for this trade right here, a target here. We kind of already feel that imbalance right there, but either here, or if we can continue pushing up, depending on how structure is forming right there, we can continue targeting this area liquidity right there. But for now, my target is not that high due to low volatility and volume right now, especially Asian sessions. So, you know, it is what it is. For this trade right here, very simple. Okay, we had liquidity sweep right here off of FOMC. They literally swept liquidity, as you guys can see. Now, I didn't enter right off the liquidity sweep because it's FOMC, right? We have major news. We could sweep even way more liquidity. What I see happen a lot of times is we fake out to the upside and we push down even more to grab more liquidity before pushing back up. So I want to wait for more confirmation. I was waiting. Let's see, where was my entry up? My entry was, it wasn't at this candle, but let me see if I can move it to where it's more precise. This is on the 1 minute time frame. That's where I enter right here. I believe it was around this candle right here. We basically right here would have been a better, more safer entry if you broke structure right here. Once we break structure right here, you literally could have entered off this candle break of structure lows near here. I would not have my stop loss already down here. That's too big of a stop loss to me personally. I don't like that risk reward. Again, you could have a tighter stop loss. My stop loss was right below this wick right here, showing that there are a lot of buyers here. So price could potentially come back here, wick out, and then continue pushing up. So that was honestly the trade, you know, very simple. I like to make my entries and exits as simple as possible. I don't want to complicate trading too much. And now, yes, this may seem like a lot for beginners, but trust me, once you take my course and things like that, you will understand price action so much more. And all this will become very, very simplified. Just trust me on that. And that's going to be for today's video. Let me know what you guys want to watch, what other future educational content you guys are interested in the future. And I will see you guys in the Discord if you guys want to join the free Discord community or at the course. So I'll see you guys in the next video. Peace out.